Well, good day, smart traders. I trust each and every one of you are ready for another profitable day within the market. Let's kick things off by having a look at today's economic calendar.
Today's economic calendar is packed with key events that traders will be closely monitoring. We have preliminary GDP figures, weekly unemployment claims, pending home sales, and a speech from the Fed's Collins. But before we delve into that, make sure you stay tuned until the end, as we will be sharing our insightful technical analysis for today on foreign currencies, indices, and commodities. But before we proceed, don't miss your chance to win an exclusive limited edition branded mug. All you have to do is like this video and answer the following question in the comments. What do we call a market where a lot of trades are happening and price swings are big and unpredictable? Is it A, bearish, B, volatile, or C, intrinsic? Make sure you subscribe to our channel to be eligible to win. The giveaway will take place once we reach 300 subscribers, and terms and conditions apply.
Let's move on by having a look at what's making headlines within the financial markets today.
In currency news, the US dollar has reached a fresh 2-month high due to signs of a resilient US economy. However, concerns over US debt ceiling talks have prompted some investors to seek safe havens. Despite the debt ceiling impasse, the dollar is not considered an immediate risk compared to certain treasury securities. The dollar has gained an edge as US economic data has demonstrated resilience, causing expectations of interest rate cuts by the Federal Reserve to recede. Now let's shift our focus to Wall Street, where US indices concluded the session with losses. The release of minutes from the Federal Reserve's last meeting revealed division amongst policymakers regarding the future path of interest rates. The Dow Jones Industrial Average dropped 0.8%, the S&P 500 decreased by 0.7%, and the Nasdaq dipped 0.6%. In extended deals, Nvidia saw a significant surge of 24.6% as it reported better than expected Q1 earnings per share and revenue figures, along with an optimistic Q2 revenue forecast. Turning to commodities, oil prices climbed 2% following an unexpectedly large drawdown in US crude inventories and a warning from the Saudi energy minister hinting at potential OPEC Plus production cuts. The Energy Information Administration reported a massive weekly drawdown of 12.5 million barrels, bringing US crude inventories to 455.2 million barrels as imports declined. And lastly, let's discuss gold. Prices for the precious metal remained near 2-month lows as concerns persisted over rising the US debt limit. Gold traded within a narrow range of $1,950 to $1,980 an ounce over the past week after falling below the significant $2,000 level. Negotiations among lawmakers on raising the US spending limit are the primary focus, with no clear indication on when a deal might be reached. The looming June 1 deadline for a US debt default adds further uncertainty, potentially pushing the US into a recession and impacting the global economy. Now, it's time for the highly anticipated technical analysis. We'll begin with Euro Ord, followed by the Dow Jones analysis, and wrap up with crude oil and gold analysis. For Euro Ord, the currency is currently trading near the primary resistance level. A close above 1.649 could trigger a further rally, potentially reaching the previous resistance level. Shifting our attention to the Dow Jones, the US 30 index has broken through the primary support, indicating strong bearish momentum. If we witness a close below 32,650, we could pave the way for a further decline towards 32,400. Now let's analyze crude oil. WTI is still hovering around the primary resistance level. A close above 74.7 might provide the necessary push for a rally, potentially reaching 77. And lastly, let's look at gold. The yellow metal experienced a significant drop yesterday and is currently just above the primary support level. Should we witness a close below 1,951, it could trigger further selling pressure, potentially pushing gold down to 1930.
So that is it from us here at Smart Online Trader. Should you be interested in any additional services that we offer, kindly get in touch with us or simply click on one of the links in the description below. As always, may the books be with you. Cheers.